Welcome back to Wealthstone. I'm Greg Shaw, here with your January market update. Today, we'll explore three key areas shaping the economic outlook. Number one, strong corporate earnings in the US and why I'm bullish on 2025. Two, Trump's recent victory and the buzz around tariffs, what actually matters for investors. And number three, concerns about the Canadian economy and why an election could bring some much needed direction. Let's dive in. Let's start with some good news. U.S. corporate earnings are looking strong. Not every corporation has reported, but those who have are much higher than expected. That is a key reason why I remain bullish for 2025. Despite a volatile year in 2024 with things like the yen carry trade unwinding, the S&P 500 closed out with an average return of around 23%. In the fourth quarter, we saw strength across tech, industrials, and consumer discretionary sectors, industries that thrive in a growing economy. Companies have not only shown resilience in managing costs during high inflation periods, but they're also now benefiting from rate cuts by the Fed. With inflation coming under control and a stable interest rate environment, businesses are set to invest more in innovation and growth. Then, when you consider the U.S. labor market, which has added 256,000 jobs in December, you've got a recipe for continued consumer spending, fueling revenue growth across the board. So what does that mean for you? In my view, the U.S. remains a leader in global markets, and I see opportunities for investors to remain invested in the U.S. as we move into 2025. Now, let's address one of the hottest topics making the headlines: Trump's recent victory and the renewed discussions around tariffs. Here's my advice: ignore the noise. A lot of media chatter can be speculative, so let's focus on what matters, actual policies that get implemented. During his previous term, Trump's tariff policies reshaped global trade with particular focus on China. If similar tariffs are introduced, it could impact sectors like manufacturing, agriculture, and technology. But it's important to note that many businesses have already adapted to these dynamics, diversifying supply chains and shifting production to minimize risks. From an investment perspective, this isn't necessarily bad news. Tariffs can create opportunities in domestic industries like manufacturing and energy as companies focus on localized production. If you're an investor, keep an eye on these sectors. Remember, markets thrive on uncertainty, but the fundamentals of strong corporate earnings and a resilient economy outweigh short-term policy noise. Stick to your long-term strategy and don't let the headlines drive your investment decisions. Finally, let's turn to Canada, where the economic outlook remains more challenging. December's inflation came in at 1.8%, which is still below the Bank of Canada's target of 2%. While this might sound like good news, it's actually a sign of weakening demand. Combine that with slowing GDP growth and concerns around household debt, it's clear that Canada's economy faces significant headwinds. One bright spot could be a potential federal election this year. While elections often bring uncertainty, they can also be an opportunity for new leadership and fresh economic policies. Whether it's addressing affordability, stimulating growth, or improving trade relationships, a new government might provide the direction and confidence the Canadian economy desperately needs. For Canadian investors, this is a good time to stay diversified and consider opportunities outside of Canada's borders. The U.S. markets, for example, offer a great balance of growth and stability as we navigate these uncertain times. To wrap things up, here are the key takeaways. Strong U.S. corporate earnings make me optimistic about 2025 with plenty of opportunities for growth. When it comes to Trump and tariffs, focus on policies, not the noise. There are ways to find opportunities in these changes. And while the Canadian economy faces challenges, the prospect of an election could bring much needed clarity and direction. As always, I encourage you to stay informed, stay diversified, and think long term. If you found this update helpful, don't forget to like, subscribe, and share this video. Thanks for watching, and we'll see you next time for more financial insights. Take care, and here's to a prosperous 2025.